Prior to Friday, January 19th, I told my members that we would have one big rally before we have the crash or a major correction. In fact, I told my members this. See, these stocks, power stocks, where there's no sellers above you, that's where you want to be. That's where you want to be, right there. Those are called power stocks when you don't have any sellers above you. That's where you want to be. In fact, if you take a look at the spiders right here, if you were a member or participating with my color-coded chart, you would have been with us on November 13th. And we had a nice breakout after consolidation. Also, if you were with us, Microsoft, same thing. We had a nice starting point right here. We had our buy signal. You can see the beautiful trend all the way up. And this was the breakout that we had again on Friday. Also, our J.P. Morgan, same thing. Our buy signal. We went from red to green. Now, what is that? Well, remember a chart. What it does is it takes in all the information and it absorbs it. A chart's a wonderful thing because it would take in economic information, it would take in financial information, take in any kind of information, puts, calls, and it absorbs it, and then it gives me what we call pricing power. You follow the money. For example, look, see, when it turns green, it's telling us after it's taken all that information, there's your pricing power. That's the price. Always follow the money. And you always want to be in stocks that there's not a lot of sellers above you. And that's what I said going into the rally on Friday. And it turned out to serve us well. But also I told them that don't be surprised come Monday and maybe Tuesday, I don't know, but we'll get what we call a short squeeze. A short squeeze is like in 2022. When you make a new high, the market makers know that you have a group of people we call tourist investors. They don't know what they're doing. These are the people who always buy at the very, very top. And they'll squeeze the shorts knowing they're going to come in. And you get that one last rally, 1 day, 2 days, and then it reverses itself. Maybe just a 5 to 7% correction, or it could even be a crash. That happened in 2022. Also happened here in 2023. And it's happening now in 2024. Yeah. So those are not unusual, and that's what's happening right now. But the thing we have to focus on is that, remember, not only is this a short squeeze rally, but before all of this, you remember, we have a terrible divergence. Never, ever did we have a divergence in IWM, the small mid-cap stocks. Let me just get rid of this. The small mid-cap stocks and the S&P. So here's your IWM. I'll show you right here. This is the first time this ever happened. Look at this. Blue, okay, right here, blue, that is your small mid-cap stocks. This is the blood, the heart of the market, okay? This tells you what the economy is really doing. Here's the S&P. But you can see the S&P has been going up, but not the small mid-cap stocks. That's one of the biggest dangers of all. And we've seen that, and we've been seeing it, and it happened again on Friday. So you got to be aware of that danger, IWM divergence. And this is the first time ever did we have a breakout where IWM, the small mid-cap stocks, are going down. Another problem, and why this rally won't be long-lived, is we have a situation with money supply. Our money supply has been contracting. Look at this. Every time the money supply contracts, we always have some very bad market news. Look at this. Money is now contracting. So you have IWM, which is the divergence that we never had before. And we have, of course, the money supply, which is contracting. And remember what that is. QE is when you expand money. Zero rates. Gives it to companies so they buy their own shares. don't even need to have profits for your stocks to go up. And when you keep pushing all that money, that QE money, keep printing it, so you keep giving money to these CEOs free, so they buy their own shares to push the stock up without having to have profits, you reach a point there's so much money in there that it causes inflation. Because when you have too much money, you don't have enough productivity, you get inflation. And that's what happened. Now it's the opposite. Now what they're doing is trying to get rid of that money, because it caused so much inflation. So they tighten now. Now the problem with tightening, okay, and trying to get that money back out is, remember, they tighten interest rates. They increase interest rates. And that causes unemployment, reduces business investment, reduces consumer spending, reduces economic growth. Take a look at the chart. This is what's going on now. I mean, it's like nobody's at home. Like nobody's running this thing. Unbelievable. People think, oh, the market's just going to keep going up. What are you, nuts? Another problem we have that nobody's talking about is right here. Interest rates. The 10-year treasury yield keeps going up. Now, look back here. This was in 2020. Remember the big drop we had in 2020? They called it the pandemic drop. Look at, rates were going up. And look what happened to the market. It dropped. Same thing happened. You look at 2008. Rates went up and the market dropped. Right now we have the same situation. We have the rates going up right now. Yields are going up, and of course that's your 10-year treasury. And the market is going to do the same thing as in 2008, 2012. Look here, 2012. When you had the 10-year treasury yields going up, and look how the market responded. And again, 2020. So what are we going to be lucky? That's not going to happen? No, it doesn't work like that. So this rally that we've had and everybody's excited about, I don't get the excitement. So we have the worst negative breath ever. Now take a look at the stocks. So the power stocks that I had my members in, using my color-coded chart that identifies the money flow. And again, we're up in the S&P. We've been up about 10% right here. And then remember Microsoft. That's another stock. Remember that caused this rally on Friday was Microsoft, and that was up about 22%. We got in there around, I think it was around January or October. We got in around October 25th. We got in again up here, okay, around January 10th on the breakout. And that's why charting's a wonderful thing. NVIDIA, that was another one that caused the market to go up on Friday the 19th. Remember, only 3 stocks, okay? Microsoft, Meta, and NVIDIA, tech stocks, was involved with this rally. So here's your NVIDIA, same thing. So this is where we bought NVIDIA right here, right in this area here. We caught that rally too. So again, NVIDIA were up 20%, Microsoft 22%. We were up in J.P. Morgan. That's another one that led the market. And that was a nice rally. Look at this. We had a beautiful setup right here. And that was our buy signal. So all these stocks, the spiders, Microsoft, NVIDIA, J.P. Morgan, and GE, every one of these stocks was what we call a power stock. We didn't have any sellers above us. And we had great buy signals on our Pro 2 color-coded chart. Apple started this whole rally. Remember when they upgraded Apple right here? But notice, it's negative. We still have more sellers than we have buyers. So I wouldn't be recommending right now anybody be chasing this rally or these stocks. And as I said, we have tremendous headwinds over us. And if you're going to get in now and think this is it, we're on our way, that you're going to be mistaken and you're going to get hurt. If anything, let the market pull back. Let it pull back. And then let's see if we can get one last big rally, make new highs on the S&P. That's the safe way to do it. Pull back, see if it holds. We make a new high on the S&P with new increased volume, then you can feel good about it. But if you're jumping in take with all the tourist investors, what are you, nuts? You're going to get hurt. We got the worst breath ever. Remember, 5 out of 500 stocks is what caused that rally on Friday. That's crazy. And remember, only Microsoft, Meta, Nvidia, and Apple. That's it. That was the big tech stocks. That's crazy. So that's where we stand. So let's see what happens here. This is now January 22nd. And let's see what happens. Let's see what happens today, how we close out today. Already the market is starting to contract. This morning we're up over 200 points. Now we're only up about 92 points. Because, see, the problem is that we've got so much money in our system, okay, that's caused so much inflation that the only way to fix this market, you got to let it go into a recession. So they can keep propping this market up. Maybe they want to prop it up for the election. I don't know. If they do, we'll continue to do what we've been doing. Look at our stocks. We keep finding our best stocks that have relative strength using our Pro 2 color-coded chart. And every time it makes new highs where there's no sellers, we'll buy or we'll add, whatever it takes. But we're certainly not going to chase this market. We are already in the market. So please don't make that mistake and be a tourist investor or you're going to get hurt. Look, I hope you hit subscribe and like, okay? I really need that. And I hope you enjoyed this common sense approach to the market. And remember, charting, again. Charting is the best way to go. You don't need fundamentals. No one cares about PE ratios. Nobody cares about book values, or no one cares about profit margins or free cash flow. It's all about pricing power. Where's the money going? That's all the big boys care about. That's all you should care about. And once you follow the money, you're going to go, hey, this is great. But the best thing is when you follow the money, you'll get the signals to sell short. So when you can buy and sell short with the signals of where that money is going, you don't need to know all that other garbage that's out there. You don't. Believe me. Look, for more information on Phil's Gang and my stock pitch, go sign up, philsgang.com. 10 days free. All right, that's about it. So that's my take on the market for Monday, January 22. See you on the charts.